Lucid Motors has been making waves in the electric vehicle industry for a while now. People have been talking about it for years, and it's easy to see why. The company has been growing rapidly and is even rumored to be on the verge of a big acquisition. But with all the hype surrounding Lucid, there are also plenty of opinions out there. Some experts have praised the company's innovation and ambition, while others have raised concerns about its long-term viability. And in this video, we'll dive into what the experts say and explore how the company could impact its investors. Let's start with Lucid's recent update from the SEC. Last December, the SEC issued a subpoena to Lucid regarding its business combination with Churchill Capital Corporation 4. The SEC asked for info on the company's future projections and statements, but now, the SEC has officially closed its SPAC investigation against Lucid, which is great news for Lucid stock. Plus, the SEC has no plans to take any enforcement action against Lucid. This closure came at the perfect time, just before Lucid reported its Q1 earnings on May 8. The latest earnings report from Lucid reveals that they made $149.4 million in revenue. But unfortunately, they also suffered a net loss of $779.5 million. This was not what investors expected, as they had hoped for $209 million in revenue. Each share saw a loss of 43 cents. However, despite the missed expectations, Lucid's earnings have increased by an impressive 159% year-over-year. They built 2,314 vehicles and sold 1,406 during the first quarter of this year. This is not good news for the automaker, as they have been struggling with a demand crisis since the end of last year. Nevertheless, the company still plans to produce 10,000 vehicles this year. Fortunately, Lucid has $3.4 billion in cash reserves, keeping them going until at least the first half of 2024. Lucid's CFO Sherry House said, "We are committed to creating an environmentally sustainable future by designing, building, and delivering the best EVs on the market." Now, business expert Larry Raymer believes that Lucid stock may not benefit much from Lucid's revolutionary Gravity SUV, as it might be too late to make a significant impact. Raymer says he's happy about the company's decision to launch a unique electric vehicle, believing that being different is key to succeeding in the highly competitive luxury EV sedan market where Lucid operates. However, he doesn't expect the new EV to be available until next year, and it might not be delivered until 2025. Unfortunately, this means that Lucid stock owners may see a significant drop in share price over the next year or two. Lucid recently announced that it's testing its new SUV, which is notable for its ability to seat up to 7 people with 3 rows of seats. This is a rare feature, as most other trucks and SUVs can only hold 6 or fewer passengers. For instance, the Chevrolet Silverado truck can seat 6 people, while the Ford F-150 Lightning comfortably accommodates 5. Raymer thinks the Gravity, which will cost about $90,000, might interest big, wealthy families who want an electric car. Plus, it's supposed to have the longest range of any electric SUV, which is pretty cool. On the other hand, Lucid is trying to sell luxury electric sedans in a market full of big names, and their Gravity won't be out until next year at the earliest. Raymer has seen many electric car startups with production delays, like Arrival and Tesla. For Lucid to make it, their cars have to be nearly perfect. But the recent review by Car and Driver found some problems. The software needs work, and the wheels make a lot of noise on some roads. The website didn't exactly say that Lucid is the best either. Meanwhile, stock market expert David Modell believes that the layoffs at Lucid will not be enough to save the Lucid stock. Lucid Group recently made a difficult announcement through CEO Peter Rawlinson's email to the staff, stating that they will be cutting around 18% of their workforce. This big reduction may impact the quality of their customer service, marketing, and product development. While some may argue that this restructuring plan could save the company money, it will actually be quite costly due to severance payments and other complications, with an estimated cost of $24 million to $30 million. Wall Street experts have different opinions on Lucid's plan, with Bank of America's John Murphy cautioning that this sends a warning signal for a company in growth mode, and Morgan Stanley's Adam Jonas taking a more optimistic approach. However, both analysts have given relatively low price targets for Lucid stock, with Jonas even issuing an underweight rating. Since Lucid Group's path to profitability is unclear and its cost reduction plan will be expensive in the short term, Model does not believe the restructuring plan will solve its financial problems. Moreover, according to investor and stock expert Thomas Neal, it's expected that Lucid stock will experience a significant decline in 2023, and investors should prepare for it. Experts David Model and Louis Navillier believe that Lucid Group's disappointing production and delivery numbers last quarter may result in underwhelming results for the period, leading to a sharp decline in Lucid stock. This plunge could be even more severe in a few months due to the company's heavy cash burn, potentially causing shares to drop significantly. Although Lucid has implemented cost-cutting measures and plans to launch a new SUV, it could run out of cash by early 2024 at the latest. The company may need several billion to replenish its coffers, which could lead to further pressure on shares. Additionally, the recently launched 2023 Dream Ahead Tour may not result in many sales for the expensive EVs, and the cost of the tour may not be a wise investment during the company's restructuring plan. The company's headcount reduction and operational update indicate that there are problems with the low deliveries to production ratio compared to Tesla and Rivian Automotive. Therefore, prospective investors should consider the facts and the company's consistently unprofitable history before investing in Lucid stock, which may crash below $5 in the coming months. It would be wise to bail if you're already invested and think twice before buying to avoid a potentially costly mistake. But before we continue, we want to thank you for watching this far. But let's go back to what other experts think of Lucid stock. On the flip side, investment journalist Christopher Niger shares his take on Lucid stock. He believes that starting a new car company requires massive money, and Lucid is far from making a profit. Lucid lost $472 million, while its revenue was only $257 million in the fourth quarter of 2022. And Lucid is currently facing challenges that make vehicle production more expensive. The prices of electric vehicle materials have increased in the past few years, putting a lot of pressure on smaller EV manufacturers like Lucid. To address its financial needs, Lucid recently conducted a private sale of approximately 86 million shares to investors, raising $1.5 billion in stock. However, rising inflation and high material costs may continue to affect the company in the coming years. According to Lucid's management, they have enough cash, about $4.9 billion, to sustain operations until the first quarter of 2024. But beyond that, Lucid may need to secure additional funding to stay afloat. Another challenge for Lucid is that its vehicle production has not met its goals. In 2022, they produced 7,180 vehicles, surpassing their revised estimate of 6,000 to 7,000. However, this only occurred because the management had lowered the initial production target from 20,000 cars. So, which of these experts do you agree with? And would you invest in Lucid? Let us know in the comments section below. And while you're at it, make sure to smash the like and subscribe buttons as well. Now, if you want to know more news about Lucid, then make sure to click and watch this video right here and enjoy. And that's the end of this video, guys. See you next time.